Hi guys, and welcome to this week's edition of our forecast. And this forecast that I'm doing today, guys, it's going to be a focus which is gonna be an outlook for the coming 2 weeks, at least for the coming 2 weeks. So you should always make sure you also mark the same levels on your chart. So looking at the past forecast that I've done, I think 3 weeks ago, everything I talked about, especially the weakness into dollar, has panned out. We can see we have a massive weakness on dollar index for the past 2 months. Yes, of course, June had a rejection to the upside. There was a retracement to the upside, but that was just an accumulation for the shorts that we have already seen now on dollar index. So today I'm going to talk briefly about what you have to expect, or what I expect the dollar index is going to be doing as we go into August. So now we can clearly see July is coming to an end and we've got a strong bearish momentum. So what is the next level that we have to look at? As you can see, so far July low is coming in at 93.42. That's just few pips short of September 2018 lows, right? September 2018 low, they're coming in at 93.385. So already that's a level that you have to take note of. So we're going to mark out September 2018, which is coming in at 93.385. So the reason why we are marking out this level, right, on a monthly chart, the reason why we are marking out the 93.385 level is because there is sell stops below that old low. Remember, an old low is an area where you're highly likely to have sell stops below. Now that we have highlighted an old low, right, we also have this low here, the low of March 2020, which is coming in at 94.525. So I'm just gonna borrow this line here and I'm gonna place it here. So this low is coming in at 94.525. You see, now what I'm doing now is I'm doing my market mapping. I'm mapping out the range that I'm going to be focusing on, right? As everyone now knows, the dollar is taking a really huge hit due to COVID and US and China relations. They are not in good books at the moment. That's why we are seeing a massive hit in dollar index, the massive weakness that we are witnessing right now in dollar index. So now that I've highlighted these two levels, so I've got sell stops and buy stops, right? And you can already see below an old low we have our sell stops, right? And then above here we've got our buy stops, right? The mentorship guys, you know exactly what we are talking about here. If you are not in the mentorship group guys, and you have managed to get the link for the video, make sure you understand exactly what you are watching, because the guys in the mentorship, you already know what we are talking about here. So we've got buy stops and sell stops, right? Now already we can see that 93.385 it's gonna be violated eventually come August, or even before end of July. During FOMC, we're gonna see this level being violated, or maybe tonight or tomorrow before Wednesday. Something is gonna happen. This level is gonna be violated, meaning the stops are gonna be taken out. So now we need to look at the next level of interest, right? The next level of interest after this old low, right? Remember, I'm on a monthly chart, guys. I'm on a monthly chart, so you have to be in a position to mark out your levels. So now the next level of interest coming in on the monthly chart for dollar index is this candle here. See, this is the candle whereby we had this accumulation and then we had a strong bullish momentum. 2017, this last down candle here. You see, the reason why I'm not taking this, because this one has got the lowest close. So this last down candle, this one here, becomes my bullish order block, right? It becomes my bullish order block, the one that opened at 91,900 and it's got a high of 92,355. So we need to mark out the high of that candle. So the high is coming in at 92. Let me just get the number again. 92,355. So we've got 92,355. That is the high of our bullish order block. But remember, with the bullish order block, first you need to consider the high, and then secondly you also need to consider the opening price, and then thirdly you need to consider the mean threshold. That means 50% of the bullish order blocks candle, right? So you'll be talking of maybe somewhere around here, you see. But that is after these two upper levels are violated. So now that we've got the high of our bullish order block highlighted, so the range that we are looking at, this is our trading range essentially, you see, in the coming of August. This is our trading range. That means whatever is going to happen in the coming month, we have to make use of that range, because that's where all the price action that we are going to be studying will be focused on. So now that I've highlighted the range that I'll be focusing on, I'm going to drop down to a weekly chart so that I highlight my weekly levels. You can see already that bullish order block level. Can you see here? That's where we had a strong rally to the upside, and these sell stops, they are going to be violated easily. So now we also have sell stops here, right? So now looking at the weekly chart, right, we also have this down candle here before we had another strong push to the upside, right? And this down candle, the low is coming in at 92755. We've got 92755. So I'm going to highlight 92755. That's a weekly level now, 92755. Now my weekly level, I'm gonna put it with the dotted black line so that I know that it's a weekly level. Now remember, you have to be in a position to link the two, your levels and the fundamentals. And when I say fundamentals, I'm talking about the news that's happening around the COVID situation, the US and China relationships, the COT data. You see, the moment you see shorts being increased, shorts being increased on the COT data, then you have to anticipate price to keep rallying to the downside. Already you can see we also have price now. You see those sales stops. This is the last down candle where we have seen a reaction. So probably we're gonna get a reaction on one of these two levels that I've highlighted during FOMC. So it's either this last down candle here, we're gonna see a rejection to the upside, or at the current level that price is at the moment, it has to take out the sales stops, right? And if it closes above, then we are rallying to the upside. But as you can see, momentum right now is strong bearish to the downside. So now I've marked out the weekly level, which is of importance to my range. You see, it's not just a case of highlighting a level which you're not gonna consider. So that's the level that is gonna be of importance to the range that I'm trading. So now I'm gonna go to a daily time frame. Now on a daily time frame, I'm sure you can all see my chart clearly. Now on a daily time frame, let me just zoom out a bit. Right, so this is my daily time frame. So we can already conclude that price is going to keep going to the downside. All right, with all the squabbles that's going on in the market right now, dollar would easily reach out to 92,755 or 92.30 in the coming month. You see, coming month or before the end of July. So I'm still expecting more weakness coming into dollar index. Only when it reaches these levels that I've marked, then I have to be anticipating for a bounce or some rejection of some sort, right? But that's gonna be determined by also the fundamentals happening during that time. You see? But for now, it's only short positions going to the downside on dollar index. And if we go to a H4 time frame, you can see momentum on H4 is dying out as we approach 93,385. Momentum is dying out. So expect FOMC on Wednesday to have a huge impact on dollar index price action. Expect FOMC. But the fact that we closed below this level here, see, the fact that we are already trading below, if price does come to 94.55, right, if price does come back to 94.55, that would be an ideal area to load short positions to the downside. But 95.55 and the price closes above, then we could see a rejection to the upside. So that is it about dollar index. That is all that I want to share regarding dollar index. We are going to be hunting for further weakness on the dollar as we head into FOMC. So expect the sell stops that I've highlighted already on the group. I did highlight the 94, what level we got here, 93.40 something level. I did highlight that on the mentorship group, that those sell stops, they're going to be violated, and that's exactly what happened. And if you know what you're doing, it becomes easy now for you to trade, say USD JPY and Euro USD. So now I'm just gonna briefly highlight the levels that I'm gonna be looking at on USD JPY. So if I'm expecting weakness to come into dollar index, then I have to also expect bearish momentum, bearish moves on USD JPY. So now we can clearly see I'm on a monthly chart for USD JPY. So when I look at the price action chart, what do I see, right? What do I see when I look at the current monthly chart of USD JPY? Already I can say that price now is eventually broke out of this range. yen has been ranging for the past 1, 2, 3, 4 months, and prices eventually broke out, meaning yen is very strong right now, right? So now it did broke out, but which interesting order block that has been broke out? This guy. You see, this was our last down candle which was holding price here. You see on these 3 rejections, this candle, which is our bullish order block, was holding price in this range. So now what I'm gonna do, I'm going to highlight the low of this candle, which now becomes my bullish order block. Remember, I'm expecting further bearish momentum, bearish movements on USDJPY. So the low is coming in at 104.441. The low is coming in at 104.441. Let me just mark out 104.441. And it's a monthly level. I'm gonna put my solid black line, 104.441, just to double check. Right, so 104.441. what's below that? We've got sell stops. Of course, they were wiped out this week here, right? This funny price action candle here, but still, whoever is gonna buy USDJPY right now, their sell stops are below this low, right? So we've got sell stops below that bullish order blocks low, right? So we've got our sell stops. Now looking to the upside, which level now becomes of interest? We need to look at an old low. So we've got 1, 2. These are 2 equal lows, but I'm gonna use the lowest low, which is coming in at 105.98, right? We've got 105.98. So I'm gonna mark out 105.98. 105.98. So basically these are 2 equal old lows. So above that, what do we have? We've got our buy stops, right? Because whoever sold, they don't expect price to go trade above that level. If that happens, that means price has turned bullish and we could see these highs being violated. So we've got our buy stop. We've got our buy stops here. And then we've got our sell stops here, right? So now already you can see I have marked out my range. This is the range that I'm going to be looking out for on the yen. Remember guys, yen and dollar index, USDJPY and dollar index, they all move the same, as in if the dollar index is bearish, you're gonna see bearish movements on the yen, meaning the yen is strong, the dollar is weak. So, but it doesn't really mean that they have to move exactly the same. You can see USDJPY has been ranging in the month of June, May, April, May, June, March, April, May, June. USDJPY was just ranging. Of course, you've got these wicks here. You see, those are stops being taken out. But if you look at the bodies of the candle, it was basically ranging. Only now, July, it has exploded to the downside, which also concurs with the strong move to the downside on dollar index. So now, same thing happening on USDJPY. So now already I've got the range that I'm going to be looking out for on USDJPY. So now I'm gonna go to a weekly chart. Now on the weekly chart, this is my last down candle, which price has already traded into, but it hasn't cleared. You see, if you see the low is coming in at 104.987, right? The low of this candle, that's a weekly level, so it's going to be a dotted line. It's coming in at 104.987, 104.987. Remember guys, this is something you do once off. It's not like you're gonna do this every now and then. When you mark your levels, you leave them there on the chart so that you've got a reference point. Because yes, most of the guys do ask me that, do you always do this every day? No, it's not an everyday thing. You see, like now I'm only doing this after like 3 weeks because I've been trading already the levels that I've marked on the previous forecast that I have done. So now we've got our weekly level where we're going to be having also sell stops. You see, we've got sell stops here. Let me just zoom out a bit. Okay, this one I need to move it here. Then I'm gonna copy, place here. This one I'm gonna move it here, then zoom in. So you can see we still have our bullish order block holding price above, but I do expect this level to be violated to the downside. So during FOMC guys, you need to be very careful, as in make sure you read what the price action is telling you. Yes, we've got FOMC on Wednesday and I'm really not expecting the rates to change, right? It's all about what Powell is going to be talking about. Whether he's gonna be hawkish, we don't know, so we have to wait and see. But expect these two levels that I've marked to the downside on USD/JPY for price to reach out for the stops below there, because yes, we have to now anticipate a bounce, but as it is, that's only dependable with a vaccine for COVID or with that heavy stimulus that is yet to be agreed upon between the Republicans and the Senate. That stimulus package, we can see dollar index bouncing to the upside. So the stars are aligning guys for that bounce. You've got Powell coming in on Wednesday. You've got the Senate, probably they're gonna sit down before the end of the week. Eventually I'm sure they will agree on the stimulus package that could see dollar appreciate a bit or erase some of the weaknesses, the losses that we have seen coming in dollar index. So now that I have highlighted the level on weekly chart that you have to take note of, also don't disregard the low of last week on the yen, the low which is coming in at 106.67. So what I'm gonna do is I'm gonna highlight 106.67, this level here. A reason why I'm highlighting that level is because inside this week's candles price action, there is a supply zone which had price move massively to the downside. So now I'm gonna go on to a daily chart. You can see the level I'm talking about. Inside this price action, you see, it's crucial. Inside this price action, there's a very interesting structure inside there. So now this is my daily level on USD/JPY. Already we've got an engulfing, a supply zone, a demand zone that has been engulfed. That's a clear indication that we're gonna see further moves to the downside. You see, we're gonna see further moves. Now I'm going to drop down to a H4 chart, zoom out a bit. You see there, you see my weekly level where it's coming in at. We had a bounce. Remember, supply and demand basics, drop, base, drop. So this is an H4 time frame. When you go into a smaller time frame here, this is a base before another strong move to the downside. So if price does come back to 106.68, this is an ideal area for you to load shorts to the downside, targeting the weekly level of 104.98 or targeting a monthly level of 104.444. I hope that's loud and clear. Remember, we're expecting weakness to come into the dollar index. That means bearish movements on the USD/JPY are ideal. Remember, you practice this on your demo accounts. Remember the disclaimer for Forex. I don't need to repeat it. Most of the guys you know already. So now if we are expecting weakness on dollar index, what then do we have to expect on USD/JPY? Right. $20 on USD/JPY is not that far, right? Yes, it might not be realistic. That is what every financial and market analysis channels out there are talking about, $20. But you must be really be careful, because that might just entice you to be targeting $20 on your longs on Euro USD. Yet we can see a bounce to the downside. But since we are expecting further weakness coming into dollar index, so FOMC and the stimulus package, they are going to be a huge determining factor on what direction is the euro gonna take. Yes, we can't deny euro has been strong in the past 2 weeks. Remember that euro package which was agreed on by the Eurozone states? That package pushed euro high. Euro is very strong. You can really say euro is very strong at the moment. So now looking at Euro USD monthly chart, we need to take note of this old high, right? We've got an old high here coming in at 14,951. 14,951. Buy stops violated nicely. You can see the buy stops were cleared nicely above 14,951, and it's a monthly level. I'm gonna put a solid line. The reason I do this, guys, is just to be systematic, and so that whenever I look at my chart, I already know that, okay, no, this is a monthly level, this is a weekly level. 14,951, 14,951. So even if I drop down to a 15-minute time frame, at the moment I see a solid black line, I will know that, okay, this is a monthly level, and then I'll make a decision on that. So now looking also on the monthly chart, the current monthly chart, which other level on Euro USD will be of interest to me if I'm looking at the chart? Remember, we are doing a market mapping. We are forecasting on what we can expect, right, to happen. Right, we've got this last up candle here. Before we saw bearish momentum to the downside, bearish moves to the downside. This last up candle's high is coming in at 12,384. 12,384. The reason why I have picked this was our 12,384. 12,384. It's already coming to 30 minutes. I didn't want to make this video long because some people, they really don't watch. So this was our last up candle, which was violated here, right? So it's very crucial to this setup. So now once I've highlighted this, right, going to the upside, the only candle which is of importance when you look at this current price action, right, we've got these highs here, right? Remember, this is a monthly chart, so these are probably equal highs, and these highs, the candle's highs coming in at 1850, right? We've got 1850. That's why I was saying $20 is not that far if nothing changes in terms of fundamentals. We've got 1850. I'm just gonna round off it to an institutional price. We've got 1850, and then after 1850, this is our last up candle, which is our bearish order block, right? This is our bearish order block. The low is coming in at 24.12. Sorry, the low is coming in at 19.15. Sorry, it was not 24. 24 is the close. 19.15. So you can see $20 on Euro USD is not gonna be far away, but these are the levels that I'll be looking at when I look at my monthly chart for Euro USD. When I look at Euro USD, these are the monthly levels that I'm going to be looking at, and already you can see my trading range is this. You see, this is the trading range on Euro USD, where I'm going to be expecting obviously bullish moves to the upside. So already we've got buy stops. We have buy stops above these two levels, right? Whoever decides to sell Euro USD, they're gonna put their buy stops above there, right? Before we start even talking of this high. And then whoever bought Euro USD, they've got their sell stops below here, right? They've got their sell stops below here, right? You see, already I've marked out the range that I'm going to be trading. So this is a monthly chart. You can see already monthly strength is to the upside. Euro is very strong, and that is concurring with weakness on dollar index. So now I'm gonna go on to a weekly chart. Now looking at the weekly chart, you can already see $18.50. The buy stops above, they're gonna be violated very soon. You see, momentum is to the upside. We've got buy stops above here, right? Above 18.14. So that means $18.15. We've got buy stops above there on a weekly chart. So I'm going to highlight that level on the weekly chart. So we've got buy stops above here on the weekly chart. We've got buy stops, and you can see already they're gonna be swept through. That's liquidity. That's easy money for the institutional traders. They're gonna sweep through that level easily. That's when you should also take advantage of it, guys. You see, long position, take profit. Let's see how many pips are we away. That's like 60 pips currently available up until those buy stops. So now that's a weekly level. Sorry, I was supposed to put it as a dotted line. So this is my weekly level, right? So yeah, that is the weekly level of interest on the current market structure. So I'm gonna go down now into a daily time frame, right? You can see already buy side liquidity is what is being offered in the current market, and on the daily for dollar index we've got sell side liquidity being offered. So now on the daily you can see we've got price pushing to clear up those sell stops. You see, price is looking to clear up those sell stops, right? So we're gonna put a buy at current market price action. Right, I need to go to a lower time frame for me to decide so I've got a target of 60 pips. I'll put my stop loss here, but I'm gonna refine it once I get to a lower time frame, which is coming in at H4. So you can already see we've got a bullish order block there. So below this bullish order block, that's where I'm gonna put my stop loss. So I've got a stop loss of 73 pips. I'm going to target the sell stops above $19, right? So that's where my take profit is. But eventually you can always scale out. You see, this is a demonstration that I'm doing, guys. I'm not saying take long positions. It's a demonstration that I'm showing you guys. So you can already see we've got a bullish order block here. So it's in this candle here, candle's price action. If you're looking to go long, this candle is gonna offer opportunities to buy into this strong moves to the upside, targeting the buy stops above $18 and the monthly $18.50. You see, there is that level here. So this is a very good, because you see we've got a demand that was created here, and then price pushes to the upside. If price comes back to this level, then you look to buy. You see, so that is where I was supposed to have entered the buy position. So I hope this has been clear to you guys, especially my mentorship guys. If you have any questions, those in the mentorship group, just send me a message on Telegram so that we can discuss it further on Zoom. The reason why I record this not on Zoom is so that everyone gets to understand perfectly what I would have been talking about, and then they can always ask questions. So yeah, I think that's pretty much about what I wanted to show you guys. Oh yeah, one more thing, the precious metal. I told you guys we've got buy stops above 1927. That was last week, and we have seen price trading through those buy stops, and price is still strong bullish. Precious metal is going to the moon. $2,000 per ounce. Can we see that on the precious metal? Highly likely we can see 2,000 on the precious metal, something that has never been achieved. Gold hasn't reached that price since, I don't know. So is it possible that we can see that? Yes, it is possible, but we must always put into context. We must always consider what the fundamentals are saying. If we are to get some vaccine stories coming out, then we could see gold dropping massively and dollar index shooting back up to the 96, 97 price points. So yeah, that's pretty much about it, guys. I hope this has been insightful to you, and you have learned a thing or two. Remember, when you drop down to lower time frames, there are a whole lot of aspects that you have to consider. For those who have done who have watched ICT's free tutorials, I really do recommend that. Those are very good tutorials. Those that you have watched ICT's free stuffs, or those that have gone into his mentorship, there is a lot of factors that now you have to put into context. There's some criteria that you have to consider, whether you're in a premium or discount, in a buy model or in a sell model. But already you can see right now on dollar index we're in a sell model, on USD JPY we're in a sell model, and on Euro USD we're in a buy model, meaning we have to consider the arrays that are equivalent to the model that you are trading. So yeah, I hope this has been insightful to you guys. I'm not gonna talk much about ICT stuff. It's not my area of expertise to talk about. If you want ICT stuff, just Google him, Inner Circle Trader. He's there on Twitter and on his website and on YouTube. You can get his stuff. So yeah, that's pretty much about it today, guys, and I wish you good luck and happy trading into the week. Thank you.